Assalamualaikum warahmatullahi wabarakatuh. We are from Group 16 and we are going to present about financial crimes, money laundering in Islamic finance. Money laundering is a way to conceal illegally obtained funds. Besides, in money laundering, they have intentions to make the movement of funds to make the proceeds appear legitimate. Money laundering also can be defined as transferring money which mislead anyone to trace and review transactions. The parties that committed to the money laundering are usually drug dealers, corrupt officials, criminal organizations, illegal gambling, and so on.
Examples of money laundering. Number 1 is structuring. Number 2 is trade-based laundering. Number 3 is cash business laundering. Number 4 is bank capture. And number 5 is real estate laundering. So we will go through further to the next slide. Number 1 is structuring. Structuring is known as morphing. It happens when someone takes the total amount of dirty money and breaks it into smaller amount. They often purchase in money order and cashier's check. Depositing a large number of it can also be a suspicious thing. Number 2 is trade-based laundering. It is similar to embezzlement. It involves in altering invoices and business documents to disguise the dirty money as business profit. Number 3 is cash business laundering. It happens when we deposit a large amount of cash to cash-heavy business. As an example, deposit the cash to a strip club, car wash, or any other cash-heavy business. This is being suspicious because the bank cannot prove the legality or illegality profits of the business. Number 4 is bank capture. It occurs when the money launderer themselves run or own the financial institutions. In this case, the money can move throughout the bank and legally transfer to other banks. Number 5 is real estate laundering. A purchaser uses stolen funds to put a deposit on a house. Any investment of illegal money in real estate to sale, purchase, renovations and improvement is called as real estate laundering.
I will explain about the cycle of money laundering. It is divided into 3 separated stages. First is the placement stage, secondly layering stage, and thirdly integration stage. First of all, for the placement stage, it is entrance to the financial system of the T currency or criminal profits. Generally speaking, this pairs serve two functions in which the criminal is relieved of significant sums of spirits of cash and deposits the money in the official financial system. The cash launderers are the most vulnerable to capture during the placement phase. This is because big sums of money might become suspicious about authorities in the legal banking system. There are a variety of possible methods to put the proceeds from crime. Next, we see the layering stage, which is happen after the placement. The most complicated layering step generally involves the international transfer of cash. This phase is primarily intended to separate illegal money from the source. The sophisticated layout of financial transaction obscures the audit path and separates the connection to the original crime. And then this is done. For example, at this phase, the money launderers might move money from country to country electronically, then divide it into investment, put it advanced financial opportunities or offshore markets. They are continually drilled to evade detection. Every time they use legislative gaps or inconsistencies and use delays in collaboration between the judiciary and police. Alright, we move to the integration step is called the last stage of this money laundering process. It is during the integration phase that money from what appear to be legal sources is returned to the criminal. Since a number of financial transactions were first placed and let down, the illegal proceeds can now be fully integrated into the financial system and used for all purposes.
Islam did not permit money laundering in its financial transactions because of its will effects on society, business, and economy. The effects on society is, the first is, it leads to more drugs, crime, violence, and terrorism in an ever-increasing circle of criminality which draws more and more people into its net. The second is regulations and other crime-fighting policies is diverted from other areas of public spending such as health and education, so we all lose out. Then the effects on business is the contracts may be lost and financial penalties imposed. The second is it will damaging reputations and causing customers to lose trust and take their business elsewhere. The last is it will tend to generate negative headlines for any companies found to be involved. The last is the effects on economy. The first is the money laundering reduced tax revenue because activity taking place in the underground economy is unclear. The second is the cycle of corruption can be difficult to break and often requires assistance from the international community. The last is dirty money can also trigger exchange rate volatility and fluctuations international capital flows.
As a conclusion, money laundering is indeed illegal or haram in Islam. This is because the act of money laundering is an act that involves illegal activities. The money obtained also from illegal and bad sources. So, that's the reasons why it's haram for Muslims to do. Therefore, every Islamic country should consider of this issue to stay away from doing things that are not pleasing to Allah. The law also needs to be tightened and punish anyone who commits this act so that they realize the act is totally wrong under the national law as well as Islamic law. However, Islamic finance provides zakat and sadaqah methods to replace money laundering. These methods are allowed in Islam because it is definitely free from illegal sources.